This is Greg Strange with the latest in our series of business vidcasts from the Institute of Directors, and with me is the IoD's Chief Economist, Graeme Leach. Well, they've done it again, Graeme. The Bank of England Monetary Policy Committee has shaved 0.25% off interest rates. Is this the first of many? We're going to see a stream of such cuts as we go through 2008.
Simple answer, no. The Bank of England acknowledged this morning that inflation was still an issue. And they've sailed into uncharted waters a little bit today. They've decided to reduce interest rates just at the time when inflation is actually likely to head well above their target. So they're not likely to follow next month or the month after with a stream of cuts. No, far from it. They're actually very concerned at the moment. They're very concerned about the growth outlook, but they're also concerned that if they lose control of inflation, then they've got a real problem as well. And so today's decision was looking both ways at once. It was, let's put a floor under confidence, let's reassure markets, but let's also not do too much. They can't do the aggressive easing that we're seeing in the US at the moment. The US is at a different point in the economic cycle. The UK is not as weak, and consequently inflationary pressures are stronger.
All right, they've cut 0.25%. What's it meant to achieve? What's it going to do?
Well, nothing dramatic in the short term, and clearly many people are on fixed rate deals, so they're going to be unaffected. And at the same time, we're actually seeing banks forced, because of the effects of the credit crunch and capital market tightening, actually forced into some form of informal monetary policy tightening with higher interest rates. But what it will do is just provide some relief for companies, some relief for consumers. But we cannot avoid the fact that the UK economy is going to slow down sharply this year. It's unavoidable. From whichever angle you look at it, whether it's the government front, they're going to slow down spending, whether it's business investment, business optimism appears to be falling off a cliff, so business investment's going to slow down as well. And the consumer is clearly hit. Consumers can hit because it's indebted, and the consumer is hit because of the housing market. So the economy is going to slow. No way around this. What the Bank of England's trying to do is ensure that it slows to bring inflation below target, whilst at the same time ensuring that we don't slide into recession.